Okay, so now we're going to move on to exercise number 4 in our chapter 0, homework 2 video series here. And we're going to build an income statement in this exercise. And again, we're starting with a merchandising company in a lot of these problems, just to build that basic foundation of understanding about inventory, etc. And then we're going to move into, manufacturing once we get into the chapter 1 and beyond. Excuse me. So, so let's get started. All right, so we got a bunch of information. The company is Peak Outfitters. We've got information here: sales revenue, merchandise, beginning merchandise inventory, purchases, ending merchandise inventory, wages expense, rent expense, and advertising expense. And so we're going to use those amounts here to fill out, first calculate cost of goods sold, and then step 2 to fill out our income statement. So this should be pretty quick. We don't have to do the kind of show your work sort of thing. We're going to use Excel with its formula functionality to actually do the calculations in this problem. So let's do our calculation of cost of goods sold here. So beginning merchandise inventory is 80,000. Remember, that's our beginning. We want to add in purchases. We want to subtract ending, and that gives us our cost of goods sold. So we can, one quick way to do a summation here, often we do sums, adding what's above in a spreadsheet. Auto sum is probably my favorite way to do that. It just automatically does a sum formula for whatever's above that blank cell, and then we can hit enter. You could type this out if you'd like to, but I just like auto sum. It's a quick way to do that. And cool. Okay, so cost of goods sold. Again, remember beginning plus adding onto it. So, you don't need to do this, but just for reference purposes, out of all the inventory we could have sold, we had $420,000 of cost, that inventory. And if we came back at the end of the month and said, oh, there's still 70,000 is left, then we infer that the difference there is the cost of goods sold, what's not here anymore. So cool. Okay, so now for our income statement, we're going to first calculate gross profit. So we're going to start with sales revenue. We're going to bring in cost of goods sold, and I'm going to do it as a negative just to really highlight. Sometimes you'll see in an income statement where they have everything more so as a positive. You kind of just have to know to subtract this minus this, but I'm going to put it negative just to make it very clear what we're doing. We are subtracting cost of goods sold. I'm going to use auto sum again. So gross profit then becomes 250,000. That's sales revenue minus cost of goods sold. And then we've got our operating expense section here: wage expense, rent expense, advertising expense. So those are just right here. So let's link to those cells. And then we can just drag this down to pull those numbers in because they're just right below it. So when we drag down, that just works. And then we can auto sum to get total operating expense, 185,000. Again, in this context, I'm just going to leave these as a positive number, even though we're going to subtract them. I like really where you'll see interspersed, where you'll see negatives is when it's kind of all within one section here, and this is a positive, this is going to be a subtraction. As far as these all have the same effect. The expenses are all basically subtractions from gross profit to get net income. So it's kind of a little more accepted from a formatting perspective to leave these positive. It's more clear what you're going to be doing. So gross profit minus total operating expenses equals 65,000. And that's our net income. So again, just another practice, another exercise to revitalize that accounting information that you had previously from financial accounting and intro to accounting, etc. Income statements, these still apply. The financial statements still apply with a manufacturer. Still, it's not like merchandising is the only one who has an income statement or anything. These are those balance sheet financial statements. Those are all basic financial statements that all businesses would use. And so But this is kind of where you're going to see some of the differences once we get into looking at manufacturing, etc. Because they're not purchasing inventory. Again, they're actually producing it. So, but hopefully this helps jog your memory on what an income statement looks like, how we calculate it through, and you can kind of see the line items here that get us to net income. So, all right, well, that wraps up exercise number 4. Thanks, everyone. I'll see you in the next video for exercise number 5.